This is Jeremy Swinger with the Rice Trader, just doing our weekly summary. We for happy reasons, didn't have the YouTube session last week because we were at the Thai 100th anniversary. I want to thank our friends in Thailand and especially the TRT for inviting us, and such a wonderful time. It's a great honor to have gone to the 100th anniversary, and we just want to congratulate all of our Thai friends for such a great accomplishment. So with that, we are now back in California, and if you guys have been watching, we are in the smokiest place and the worst air quality place in the whole world, and our staff has been affected by the fires. In fact, one of them even lost their house. So, you know, it is a local issue, but it's definitely even affected our TRT family, and you know, these type of things happen both in markets and in life. So, you know, it's very interesting. It almost looks like fog. It's so smoky here. But definitely something we're watching in a local environment, you know, one of those oddities of life as such things happen. So, that being said, I just got back from an ag technology conference, and before I even get into the rice stuff, I'm going to talk a little bit about that. It was very interesting. There was drone technology, there was a bunch of equipment, automated machines, you know, tractors driving themselves, a lot of data, electronic assets of looking to the future, something I've had a great interest in and I've been working on for a couple decades. It was just very fascinating to look at the direction of very high-end, you know, think type groups and investors that are looking at where will the future of ag be in the next 5, 10, 20 years. Some phenomenal ideas were brought forth. They're looking all the way to water, to using artificial intelligence and weather models. It was just a very fascinating time, and definitely added to my knowledge base. Even though it's been a pretty wild a few weeks, and I really debated going to such a conference after being at Vietnam for the World Conference, and last week I was in Thailand, back for only 2.5 days, and with all the issues going on, I did still go to this technology conference. It was definitely still worth it because of how much knowledge I gained on people's thoughts of the future. So, you know, I definitely could talk a lot more about that if anybody's interested, but I was just very fascinated by some of the very far end stuff people are trying out and seeing where we could go as world ag, especially on the technology side. Besides some of the other things, it's actually been a bit slower week. You know, we still are focusing on what we have. You know, it's the classic China, Philippines, and the oversupply situation. And because of that, as we talk for many weeks, you're definitely getting some weird price reactions. On one end, you have India that's at 370 for 5%, Pakistan's at 360, then you jump up to Vietnam at 410. And at those jumps, you're gonna have some big drops in demand, and clearly the Vietnamese are pushing that we're gonna trade to the Philippines. They're relying on this. And the Thais to a lesser extent, because this week they're down to 387. But that is, again, a $23 difference between Thai rice and Viet rice. Extremely rare when you look at the data. That is an outlier. Now, the market is telling you something. So I don't think, very surely don't think that spread can stay. The Thais are definitely going to get the business, while the Viets are going to slow their trade up, and the question is, how long can this go on? Which goes back to this week, and we look at how is the Philippines, have they booked anything, and it's still the retender. It continues to be this almost standoff in the Philippines, and frankly, to the industry, the Philippines probably can get their rice much cheaper if they play this right. The world continues to focus on this Philippine trade. The fact that their Congress forces them to go through a tender is the reason prices are probably holding up. I mean, we've talked in the rice show this week, there has been some Chinese demand. You know, COFCO got 100,000 tons from Thailand. You know, there is some other demand occurring. But remember, China continues to export and continues to destabilize the whole global complex, and not just rice. I mean, there was many great discussions at this conference about how China is just taking over in a lot of markets, and that their supplies are definitely affecting the price. So while China is showing some signs, it's really the same story. We have the highest supply since 2000, when prices were like $190 a ton. And obviously with inflation, stock-to-use ratios, that's not the price it should be today, but it definitely is indicating the price in all grains should be much lower. In addition to that, of course, the big thing in the market has been this massive depression in oil. That's definitely going to affect the overall grain